Welcome back to the stock portfolio update videos. Currently, my two stock portfolios sit at a value over $86,000. That's made up of the $50,544 in my stake portfolio and the $35,864 in my Vanguard portfolio. Today I'm going to be going through my portfolio, giving a little bit of an overview of my holdings, how things are looking, and why I'm stacking a bunch of cash right now. Overall, quickly looking through my holdings, you can see not much has changed, other than recently I did sell out of JP Morgan, which I mentioned in my last video, but I sold my complete holding of JP Morgan for a 70% gain and invested that money into Google. With Google, you can see it's had a decent year so far already, up 28%, but it's had a recent pullback, and I've managed to get my total equity closer to $3,000 now, and I'm up around 13.8%. With an average share price of $151. So long term, hopefully Google can pay out for me. But yeah, recently I've added to that and sold out of JP Morgan. And if you want a bit more information on that, you can see my previous video on why I went through why I sold JP Morgan and why I decided to buy into Google. But today's main focus is going to be my cash allocation. So you can see all my holdings have stayed the same. Same on my Vanguard portfolio, I still just hold VLC and VGS. So whilst the market is ripping right now, you might be wondering why I am holding cash. I'm not actively holding an absurd amount of cash like what you hear with Warren Buffett and many other investors. Even Jeff Bezos selling out of some of his Amazon positions for getting the money out whilst everything's going up. But I am building up a little bit of a cash position in the hopes of potentially being able to use that if there is a change in the market and a bit of a negative sentiment and there is a drop down potentially. Overall, I don't think it's a good idea. Remember to do your own financial advice. This is not financial advice, do your own research. But in my opinion, right now, it's not a probably good idea, or even if you look in the last recent years, to just be sitting on cash hoping for the market to pull back. I'm still going to continue investing and putting little bits of money aside each week or each fortnight when I get paid into this account. But at the moment, the goal is just to continuously invest, but also build up a bit of a cash position in the hopes, well, not necessarily hopes, but if something does happen and the market pulls back, then I will be able to capitalize on this opportunity and buy the dip, as you would say. This is a similar thing to what I did in 2022. As you can see, when the market traded down, I managed to use this downturn to really grow my portfolio. I was in the red a lot, but me continuously dollar cost averaging in and buying at these low prices allowed for the gains of 2023 and the amazing gains so far of 2024. As you can see, it's pretty much been a straight line up. My goal was to originally save up, give or take $10,000 to have on the side, just so if there was a real market downturn, I could invest that money. And I'm pretty much on the way there. And you can see with that money, if I did invest it, I'd be getting closer and closer to the $100,000 mark, which is a really big mark for me. Originally, it was the goal to hit it before the end of the year, at the very start of the year and last year. But I realized being a bit more realistic, since I've done some travel this year and I've had other things pop up, the goal is now to get to 90,000 before the end of the year, and I think I'll well be able to. I'm pretty much just 3,500 I think off. Granted, there's no massive fluctuations in the market. As you can see today, the stock market was down 1.78%, or my portfolio was, which is close to $1,000 if you compute the both of them. So a little bit of a downturn today, but long term, I think before the end of the year, I can still hit the $90,000 mark. So I've also been investing a lot more money into my Vanguard portfolio in comparison to the stake portfolio. Main reason for that is just the diversification and the strong US dollar. So if you would have seen, if we had a chart of the USD versus the AUD, when I started investing 2021, I could invest and buy and get a lot more bang for my buck, where now when I do the currency transfer, it pretty much burns my pocket. USD is very strong now. I think it's 1 USD or 1 Australian dollar is like 66 cents USD. So it's been quite painful with this recent downturn. And if I invested into my stake portfolio, I also have to pay fees when I do transfers and purchases, so there's more fees with the stake account in comparison to my Vanguard account. So the goal is to get this up to $50,000 as well. That'd be very nice. But before the end of the year, hopefully I can get it to around 38, around there. Just before that $40,000 mark would be a nice goal. If there was a real downturn in the market, there are some stocks that I've been eyeing up. One actually had a recent downturn today, and that is Amazon. If we look at the last day alone, it's down 4% or nearly 4.2% in trading. So it's had a bit of a dip down. I think this is especially after the election. There's been a lot of a cool off with all stocks, and yeah, Amazon's had this little downturn. It is a stock I was looking at buying, either that or Google. I ended up deciding on Google due to the lower PE ratio. But if this continues to dip, as you can see, it was previously trading in the 210s, 213s. I'll happily transfer some money across into my stake portfolio, even with the transfer of the currency and the fees, just so I can get in on Amazon in the long term, because I still believe in it long term to be a great investment and company to hold. Overall, with my Vanguard portfolio, I highlighted it shortly, but my goal is to continue to grow VGS. I think VLC, I would like to get it to 15,000, but I still want to have VGS as my main position long term. So I'll continue to put money aside into that, and that's kind of where I want to go, because I see more growth potential in the overall international shares and US shares than I do in the Australian companies. This VLC holds a lot of the big banks and things like that, which have had a very big year this year. That's why the returns are 25%. But I don't think that's very sustainable. It also holds some mining companies like BHP. So I have to reassess at the end of the year whether this is where I want my money to be. But overall, it's not been too bad for me as of late. Having a look again through stake, one of the stocks that actually did have a massive day today is Palantir. So this is a defense company or technology company that you might have heard of. And if you have a look at the last 6 months, it's up 200%. And just the last day alone, it's up 11%. I believe they're changing listings to the New York Stock Exchange, so that will be interesting to follow, but I haven't really kept up with it much because it's not a stock I invest in. The main thing I can see is that PE ratio of 309, which is crazy to look at. But when you have a look at its last 5 years, it really had this down period for years. I remember people talking about Palantir, and then just this last year alone, or even last 6 months, is where all the gains have really come from. So if you're an investor in Palantir, you've probably made a lot of money, similar to what happened with Nvidia. But this is not a stock I personally have any money in. Having a look at my Excel spreadsheet, you can see this kind of just gives a bit of a better view of how the portfolios are weighted. You can see VOO, which tracks the S&P, is 50% of my American portfolio. And then the rest is all individual allocations like Microsoft, Apple, Google, a lot of the tech companies. And then there's my Australian portfolio, which is pretty much 60-40. This gives a little nice view for any new viewers of kind of the portfolio growth. Even for myself, I like to look at it because I can look back a few months and sometimes you don't actually see the growth. You feel like you're just putting money in and you're not really getting too much out, but you can see how much it's really grown and how consistent it's been with my investing. And that's mainly due to me just consistently putting deposits in each week, each month, just putting money in and keeping this long-term outlook. And as you can see, the figures on here only say 49 and 35 because I do this at the last day of every month. So when it comes to this month, again, I'll have another big gain, which will be nice to track and put in onto the spreadsheet. But yeah, you can see these started with 17,000 and 2,000 respectively, and over time it's just been growing as I hopefully get that snowball effect. All my dividends are reinvested, and while we speak about dividends, you can see I track my dividends. I will try to make this a bit neater and prettier, but I don't think I'll really get much dividends this month. I did get a tiny dividend from Apple, which I plan to just reinvest into whatever I decide to put the money in next. But you can see I get the quarterly distributions from Vanguard, which are my main big dividends, and then I get the stake, I get the VOO distributions, which will be around $50 every quarter, and that's USD, so that's not bad either. My goal for next year with dividends is to get them over $1,500. Maybe if I invest a lot, maybe closer to the 2,000. That'd be a really big goal of mine, but I think I'm still well short of that. Overall, I just wanted to do a quick video today, just kind of speaking on the cash I'm holding and how the portfolio has been trading recently. Feel free to update how your portfolio is doing in the comments, and that's all for now. Thank you.